Bloomberg Audio Studios.
Podcasts, radio, news.
Bitcoin coming off a little bit recently, retreating. Investors try and digest what this recent rally means. You're also seeing, obviously, the work through of how we have moved from kind of the non-ETF environment into the ETF environment, which takes us to our next guest. We have seen one of the big themes post the ETF launches is a big outflow from the Grayscale fund. And what we've now got is potentially Grayscale launching a kind of mini fund, which will have lower fees, we understand. We need to get some details on what is happening here. The perfect person to ask around all of this, of course, is Michael Sonnenshein, Grayscale's CEO. Michael, great to see you.
Great to see you.
Great to see you in person, which is fantastic. I think you and I have met many times down the line, but nice to see you here in London. Look, we'll deal with the ETF in just a moment. First of all, talk me through your view of the recent price action. What is going on here? We're seeing a little bit of a roll-off. Is that Fed-related? Is just that because we've come too far related? What is going on?
Well, I think we have to just examine where we've been over the last couple of months. It wasn't long ago that we were in a crypto winter, and as crypto winter melted, prices started to accelerate. Around the time spot Bitcoin ETFs got approved in the U.S., many called it a kind of sell the news event. And on the back of that, we've seen unprecedented demand for spot Bitcoin ETFs in the U.S., which has been a real driver of Bitcoin prices. We broke through that all-time high just a couple of days ago, all the way up to about $73,000 U.S. dollars for the Bitcoin price. And now we're seeing that, come down a little bit, which is healthy. Bitcoin does this from time to time. Investors understand that these pullbacks are normal, healthy, expected, and we're still up over 50% year to date.
When all the ETFs launched and when we saw GBTC convert, I spent a lot of time with Katie Greifeld, who was very obsessed with fees, as you well know, surrounding all the various ETFs and trying to track the impact that those fees potentially had in terms of outflows. We've continued to see outflows coming out of GBTC, and I'd be interested to get your take on this going into other ETFs. You are now launching a different version of that fund with lower fees. And the question, therefore, that everybody's scratching their head about is, why don't you simply just lower fees on the original fund and potentially stem some of the outflows?
Sure. Well, this is a really important question, and this is on a lot of investors' minds, so I want to, attack this head on.
Yep.
When GBTC uplisted to the New York Stock Exchange, it did so in an unprecedented way. It had $28 billion of assets under management, a 10-year track record, and a very diversified shareholder base. And when we look at that in the context of the ETF wrapper, anytime you've seen a new exposure, a new offering type, fees tend to be higher, and over time, fees come down as those markets tend to mature. Now, again, it's only been about 8 or 9 weeks, right, which, in crypto is kind of like 2 years, but in the real world, it's only about 8 or 9 weeks. And so this market has matured and has come in faster and more furiously than any of us could have anticipated. So it has always been our intention to lower fees on GBTC over time as that market has matured. And, as you said, we also did recently file for the Grayscale Bitcoin Mini Trust, which will come to market given regulatory approvals with a lower fee and really give investors the opportunity to have greater access to this ecosystem, allow for Grayscale to have both kind of its flagship GBTC offering as well as that mini kind of core allocation offering through ticker BTC, again, if we get regulatory approvals for the product.
So lower fees over time, which, to be fair, is a mark and shift in thinking and what you've said previously. What's the catalyst for that, though? What do you need to see to say, all right, now we have to make that move?
Well, I wouldn't say it's a shift in thinking, more so something that's kind of always been on our roadmap. When we look at, again, historical, prices and the way that markets have matured, it's usually taken quite a bit of time for those new products to come to market, get saturated. And I think for us, when we zoom out, given it's only been 8 or 9 weeks, we're just at the end of that first inning of satisfying that initial demand before that next wave of growth will happen, where we're talking about platforms, financial advisors, registered investment advisors, private banks, first getting comfortable and onboarding some of these products to their platforms. And we think that could be the driver of this next wave of adoption of spot Bitcoin ETFs.
Good morning, Michael. So is the answer then that you think you can be a price setter and you don't have to be a price taker in this market?
Well, again, prices certainly will come down over time. I think a lot of the new issuers were trying to lure new investors into their products, starting from scratch, with no track record, no assets, no AUM. And we will, see those products continue to emerge as time goes on. But you are seeing a little bit of a cohort amongst the Grayscale product, the Fidelity product, and the BlackRock product really taking kind of the liquidity position within the market.
Let me ask you a sort of step back question around the way that crypto, blockchain fits into some of the other big tech trends that we've been talking about. Clearly, there's so much excitement around AI right now, and perhaps that detracts a little bit from some of the faster money that might have gone into crypto, and maybe it's chasing some of the stocks that do well out of AI instead. But I wonder if you link the two. Some people talking to me about how blockchain could have an opportunity with the AI era around validation and verification, and that's an interesting area to watch. How does that sound to you at Grayscale?
It's actually an area that we're very focused on and very excited about. We feel that AI and crypto have been really two technologies that have been growing independently of one another. And now that AI has become a little bit more mainstream, we're starting to see adoption and usage, but we're also starting to see some issues with AI, things like bias and deep fakes. And when we think about the technology that underpins many crypto assets, blockchain, it can actually serve to ameliorate some of those issues that we're seeing in AI. And so as we move into this next era of adoption, we actually could see how these two technologies could actually symbiotically grow together rather than continuing to mature as independent technologies.
So you talked a little bit about how the demand for the ETFs is driving the price higher. Let's talk about it in reverse. There is a halving coming up. Are you concerned about the read-through into ETFs at a time when products like yours are seeing so much momentum?
Well, my team has always led with investor education, and given that the introduction of spot Bitcoin ETFs have really been almost Bitcoin's mainstreaming moment, we're going to use this upcoming halving, which I think is only about 30 days away, as a reminder for us, for the investment community, to really dive back into the fundamentals of Bitcoin, that this halving is baked into the Bitcoin protocol. This is an important part of helping investors understand the verified supply, the constrained supply that underpins Bitcoin. And I think a lot of investors are going to not only focus on that over the next 30 days, but also see how it is a catalyst for prices in the months that follow, like it historically has.
Michael, in theory, the whole crypto space should be an uncorrelated asset. Doesn't feel like that right now, does it? We've got a Fed meeting coming up a little bit later on today. As you look at the relationship between Fed and Bitcoin, the Fed decision and Bitcoin, how does it change the reason for me putting it in my portfolio? Is this an uncorrelated asset? What role does it play in my portfolio if it is still correlated with the big macro events that we're watching?
Well, there's no question that if you look across asset classes, there's certainly been a convergence around correlations. And so what we're hearing from investors is that if they want to beat their benchmarks, they're going to have to start diversifying as assets get increasingly correlated. And that means diversifying into new asset classes like crypto. I certainly think, and the Grayscale research team has really done the analysis to believe that for many investors, an allocation of maybe up to 5% of their holdings, their investable assets in crypto, may make sense for investors with the right risk tolerance. However, in the context of the Fed meeting, we do believe that if those rate cuts are actually going to happen later this year, that could actually be quite bullish for Bitcoin prices.
Okay, Michael, really nice to see you. Thanks very much for coming to see us while you pass through London.
Thank you.
Michael Sonnenshein, the Grayscale CEO.